Hello? 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 This is the Vancouver
Commercial
Real Estate Podcast.
And welcome back to the Vancouver Commercial Real Estate Podcast. I'm your host, Cory Wright.
And I'm your other host, sometimes host, I should say, Matt Scalina.
You're my favorite of the two, just so you know.
Oh, thank you.
I said that.
I'm the only one who shows up.
Well, I said the same thing to Adam last episode, so take it for what it's worth.
All right. Well, I'm happy to be here. I was especially happy to be here because we have Raymond Wong on the program today, out of Toronto, Vice President of Data Applications and Data Solutions at the Altus Group. And this is a great conversation. Raymond has been in the game for over 30 years and talk about, you know what they say, Cory, the devil's in the details. And and this is data rich, and Raymond is a very smart guy. So this is a great conversation.
Well, not only is the devil in the details, but also the data is in the details, right? So
details are in the data.
Details are in the data. A lot of our listeners may not know what the Altus Group is or what they do, but they provide extremely detailed frontline information on everything that's happening in all asset classes, on transactions to leases to sales across Canada. And I mean, from a brokerage industry, a lot of us in the brokerage community, we all subscribe to their programs. And that's why we're so lucky to get them on today. But just very in-depth knowledge of what's going on, where, who, how, and everything in between.
Looking from the outside in, on the residential side, and we've talked about this, MLS, there's exclusive deals, but for the most part, almost everything is on MLS on the residential side. We've talked a lot about how on the commercial side, the deals happen. That's why you never want to talk to a residential guy if you're trying to do a commercial transaction. It just doesn't make sense because they're not in the know. You have to have somebody really embedded in that community to know where the deals are, what's actually for sale, etc. And Altus Group, as I understand it, provides that kind of that missing link to providing the data that people use to make decisions in the commercial space.
Well, I think one thing in commercial is there's so many different angles on why a transaction happens versus someone buys a condo, it bought for X, sold for Y. In commercial, when a transaction takes place, was it bought by an owner-occupier? Was it bought by a developer? There's so many assets, so many factors that go into that decision. And that's why some of the numbers can always look so skewed sometimes. So these guys not only track those, but they also go find the information out for you. So when we're trying
who bought it?
Who bought it? Why they bought it? What are the footnotes? Was there additional density that's going to be applied for? So it's a much more in depth than just kind of like, oh, it was bought for 500,000, sold for 6. It's why did it sell for 600,000 or 6 million? Is probably more realistic. Why did it sell for 6 million? Who bought it? So it gives us a lot of really inside knowledge, but like you said too, it also tracks off-market stuff that not everyone's going to know about. So when we pops up on our screen, maybe the neighbor bought it, and they'll track that.
Well, Raymond definitely has his finger on the pulse, and he's been watching the commercial real estate market for 30 plus years. Yeah. So a great get for the Vancouver Commercial Real Estate Podcast, but it's a long conversation. So maybe we should cut to it. But before we do, Cory, of course, the Vancouver Commercial Real Estate Podcast is always sponsored by
Al, our good friends over there at Impact Commercial Group with over 50 years of lending experience. For all your commercial lending needs, visit them at impactcommercial.ca.
Well, maybe we'll cut to our discussion with Vice President, Data Applications, Data Solutions, Raymond Wong at the Altus Group.
Enjoy, guys.
Okay, we're here with Raymond Wong, Vice President, Data Operations and Data Solutions at Altus Group. How you doing, Raymond?
Great, thank you.
First off, Raymond, thanks so much for taking the time to speak with us. Maybe can you start by telling us a little bit about yourself?
Yeah, well, I've been in commercial real estate research for plus 30 years now. I focused my entire career on looking at market trends and analysis across Canada. And I really believe that people can use data to sort of help them with their investment decisions as well as identify risk and opportunity. So again, it's just I've spent all of my career on the research side.
And then, Raymond, for our listeners, can you maybe tell us a little bit more who Altus Group is and the type of research and data that you supply and who you supply it to?
We mainly service the commercial sector. So we're a global company focusing on software or real estate software, and we're very well known for the Argus software. And from a data perspective, we look at benchmark and indices, so how buildings compare with one another in way of performance, as well as valuation and market analysis. So it's utilizing the software and data to help our clients with their real estate objectives and strategies.
And Raymond, I'm not in the commercial real estate space. I'm familiar with Altus, but less so than Cory. I bet some of our listeners out there are thinking, okay, they're used to the residential kind of side and MLS. Can you talk a little bit about the differences and kind of, obviously Altus provides more information, but can you talk about kind of the space that Altus occupies in relation to MLS?
Well, with MLS, you have the various real estate boards, and we work in partnership. And I apologize, we do collect residential new homes data. So we work in conjunction with the various real estate boards on because they more or less focus on resales. And we focus on, we go hand in hand because we also look at the availability of product or listings in the marketplace. And what we look at from a residential standpoint is very similar to commercial. What's the highest and best use? And we do a lot of sort of multi-res or multi-family residential with apartments. So we're very cognitive of consumer trends and needs. And we have the same drivers in our sector with respect to the impact of immigration, to interest rates, to consumer confidence, and how that impacts both the res and the commercial aspect, and as well as market fundamentals going forward. So the two are sort of similar, but you have various different indicators in the way of price points and data that you track. But the factors that are influencing both really impact on both commercial and residential trends.
I know that William Wright, Cory's brokerage, subscribes to Altus across Canada. Is there any public-facing component to this where people can access information without a subscription if you're not in the industry and you're just interested in commercial real estate? Or is it primarily industry insiders or industry participants subscribing?
Absolutely. So with our altusgroup.com website, you can access market trend reports, especially on the commercial, as well as some aspect of what's happening with the housing market and direction. So again, our use of the data and leveraging where we think has potential risk and opportunities with respect to market direction. So that's available on our website. But again, if you want to go deeper with the information, especially on the data component, that's a subscription. But our information is available on our website.
I was just thinking now that after we're sharing that, I could be out of a job if enough people subscribe to this to Altus. Raymond, one of the biggest reasons why I wanted to have you on today is you guys are obviously on the forefront of what's happening, not only in BC, but across Canada in every major asset class. And one thing we wanted to sort of dive into is what are you guys seeing with respect to how is BC stacked up against maybe other major markets across Canada during COVID and maybe pre-COVID? And then what markets in BC have sort of accelerated and what asset classes have? And I know that's a loaded question there, so we'll unpack
and that's
it
a
slowly.
lot. Maybe that's a half hour's worth of conversation.
Yeah, I was going to say.
So maybe we'll start with how is BC, what have you guys seen? Like how has BC been over the past, say, 18 months during the pandemic, and how is that compared to other provinces?
You know what? It's interesting when you look at on a major market basis, we always compare Vancouver and Toronto. And Vancouver and Toronto is the most recognized markets on a global basis, especially dealing with investors. So when you're looking at investors, they're always comparing Vancouver and Toronto assets. So usually from an investment standpoint, Vancouver, BC is always is number two to Toronto in the way of investment activity. So from that perspective, there's direct parallel. So Vancouver went through the same thing that every other market went through with the pandemic, that especially the impact on the office market, and with increase in sublet space, and the availability rates moved up both in Vancouver and Toronto. And you also had that sort of movement of people to the outlying areas like Vancouver. You have the Kelownas and the outer suburbs of Vancouver, as people were looking to move into more space, especially if they were working from home. So the concern in BC and with the other markets, that like Victoria has also benefited from that movement, but Victoria has the same bit of challenges as Vancouver from housing affordability standpoint, and as well as Toronto. So everyone's gone through that sort of similar shift of on the office front, and as well as over the last number of months, it's sort of a return to the urban area after your apartment vacancy sort of went up a little bit during COVID, because people are starting to move out for looking at more space. So similar to Toronto, Vancouver also saw an increased flux of demand in apartments in the urban area, as well as with new homes on condominium activity, especially in the downtown. The level of activity in both Vancouver and Toronto really increased, especially when you compare it to actually 2020 and as well as 2019. So there's similarities from that perspective. But one of the positive things that we've seen, and we sort of covered this on the pre-call, is what we like seeing on the office market. So both Toronto and Vancouver, and as well as a few other markets, we started to see a drop in sublet space. So as a percentage of the sublet space that is sublet, that was really driving the availability rates up, because people were basically trying to get rid of their space or didn't need their space anymore. Vancouver actually saw both a decrease in the sublet space and a decrease in the availability rate in the downtown. Whereas Toronto saw a decrease in the sublet space, but they still saw a slight increase in the availability rate in downtown. So in a way of a recovery performance, Vancouver is actually doing a little bit better than Toronto and some of the other markets across Canada, especially with Alberta. But you're seeing that Vancouver is starting to come back a little bit, at least positive in the signs so far, and places like Halifax. So Halifax, they've also benefited from people relocating into sort of more space or bigger bang for the buck from a residential perspective. So we're starting to see some positive aspect, but if you look at overall growth in investment, Toronto and Vancouver have really increased the sales volume this year, especially compared to a year ago.
Now, you guys are obviously tracking these major transactions, and I think we'll maybe circle back quickly just to that office market there that a lot of people have question marks about. Has there been a lot of large office buildings that you've seen come across and transacted both in Vancouver and Toronto? And if you have they sold at, record-setting prices or much higher than maybe what you guys would have expected based on the trends or the concerns in the market?
Well, the challenge on the office market, the biggest things that's happening with the investment market is ICI land and res land. That's always done well as the number one activity for investment. And traditionally, it was always office, industrial, sort of apartments. But if you look at some of the challenges or some of that uncertainty in the office side, is reflective in the investment activity. So overall investment activity has dropped off, and the demand for industrial or the activity for industrial and apartments have increased at a faster pace. And same thing with retail as well. And that's because of some of the redevelopment in that area. But we've seen some of the rents, office rents drop and incentives increase.
Yeah. But
we haven't really seen prices drop. And that's also a result of the current owners, they're not really in trouble. They're still getting paid on the rent, especially on the sublet spaces. So there's not a big discount in the way of office prices, or at least we haven't seen those big transactions yet. But we have seen transactions in both Toronto and Vancouver for office product, but it's just not as strong as compared to the other products. So we're definitely haven't seen sort of a fire sale on the office side, and in a way, it's probably seen a flattening of prices there. But again, that still remains to be seen. But when you look at some of the positive signs that we've seen, especially with Vancouver, with the office vacancy rates, it's starting to stabilize, and especially not just the downtown, but in the suburbs, and it's starting to come down a little bit. And that's the first time we've seen that since sort of pre-pandemic. So it remains, the jury's still out on the office market. It's going to take some time and see if people are actually going to enter their buildings, because one of the challenges right now is public transit. Do people feel safe getting on public transit and getting into work? And for me, when I take public transit, I live in Toronto, work in Toronto. That when I take public transit, there's basically nobody on the train. Mm. But when I drive, it's taking me back to pre-pandemic levels, because I live north of the city, and it's taking me anywhere from an hour to hour and a half to drive home because everyone's driving. Nobody's taking public transit. And the parking lots are fuller than during the pandemic. So people are starting to come back to the office, but they're driving or taking their own, some sort of own transportation. And I think that's why people are sort of moving back into downtown. So at least they can walk to work and not have to focus on public transit. But that's going to take time for the office market to sort of pull its way through. And again, there's a lot of discussions right now with the hybrid model and whether or not you need office space, especially if people are only in for 2-3 days a week. So right now, a lot of companies are trying to reassess what their office needs are, and whether some are expanding because of certain safety protocols with COVID, but some are also shrinking and are closing up their office altogether because they're basically telling their employees to work from home, and instead having a sort of a smaller office footprint and having sort of a hub and spoke concept rather than trying to bring everyone back into the office pre-COVID sort of time period.
Your Toronto subway system there sounds like the Canuck bandwagon over here. There's nobody on it to start the season.
Well, and actually, speaking of not the Canucks but the subway system, anecdotally, a guest of the Vancouver commercial or the Vancouver real estate podcast, the other show that we have, Wendy Waters, I follow her on Twitter. She was in Toronto this week. Interestingly enough, she said on Monday she took the SkyTrain in Vancouver downtown at 8:30 a.m. and it was packed. And on Friday, she was in Toronto and she took the subway, and she said she was the only one on the train. So I don't know. She was saying how stark the difference was. I wonder what that's about. But it does sound like, and again, this is from somebody else, that Vancouver's public transit actually seems to be getting back to normal. Although I don't think Cory's been. Have you ever been on the SkyTrain, Cory? I know you showed up in a limousine.
Yeah. That was the public limousine, also known as the bus.
Well, by the way, Wendy and I were on a panel on Wednesday, and I'm on the same page. I'm a huge fan of the research that she produces.
Oh, right on.
And that could be a reason why that you're seeing the office market maybe come back a little bit quicker compared to Toronto. Because when you look at some of the global markets, like Asia's come back a little bit faster than on a global basis. And I think there's this one report, I think it was through Bloomberg, but they were about 13% below capacity pre-COVID, and the public transit was at 73% capacity. So I think the two are related. It's getting people back into the downtown. and the numbers with a decrease in, because Vancouver's had really good activity this year, especially on the tech sector, and what Amazon is taking up 100% of the space that is under construction, even though the instructions are that people are still working from home, but they need that footprint for future growth. And I think public transit is a big function of getting people back into the office if they're feeling safe. But the other component that you're also learning is that as people that live in the suburbs, do they really want to go back to the hour and a half commute back to the office? And the other argument is that you need that collaboration, you need that interaction. And I'm going back in the office about 2 or 3 days a week. It's starting to people coming back. There's a few people, and you need that type of synergy. That's why I'm a big believer of being in the office and as well as the downtown office, especially with Toronto, because the transportation hub, it meets at Union Station. And to a certain extent, I think same thing with Vancouver, all the connecting points for public transit leads into the downtown as a centralized location. So I think that part is needed. And I also think that what's going to happen on the office front is going to evolve. And a lot of companies, even the company that Wendy works for, GWL, everyone's trying to focus on what type of amenities are needed to bring people back in. And you need to bring people back in for a reason, not just to work in their office 9 to 5, but what type of synergies, breakout sessions, strategy sessions. But you need to bring people back in for a purpose. And from a amenity standpoint, we've spent the last 20 months ordering on our laptops for lunches, dinners, and everything. And I think people kind of want that, even going back to the office. They want to have that level of convenience rather than go out and get something, and whether or not the building provides those type of amenities or even wellness concepts. I think those are the type of things that companies are evolving, and they're trying to figure out, okay, how do we bring people back in? And as well as companies are trying to figure out what are the reasons. And partly is that collaboration and that mentorship of the employees and staff. And that's how companies grow. There's different ideas, and the idea to have that accidental meeting in the hallway in the elevator to spur new ideas. So I'm as you can tell, I'm a big fan of office, especially downtown office.
Well, I echo exactly what you say. I think companies are going to struggle not having some form of office or some form of interaction with their employees, because you're not going to be able to retain them. It's going to be hard to create a company culture and probably even expand and grow those companies if you don't have people in the office space, because a lot of those collaborative ideas won't exist if people are all working from home. Shifting over to sort of BC, what areas in BC have you guys maybe seen an uptick in maybe growth from a purchasing side? Maybe like Surrey and market that you're seeing a lot of increase, just say in all asset classes across the board, versus maybe Vancouver's activity has diminished a little bit. Where have you guys seen maybe increased volume of transactions throughout the province, and maybe where has it pulled back a little bit?
Well, it's sort of based on location, but based on product availability. Because as you know, one of the hottest commercial sectors has always been on the industrial front. So it's anything to deal with logistics and the availability of land. So without getting to your Burnaby and Surrey in the way of activity and from a cost perspective. So I don't have those numbers in front of me, the actual difference in volume, but I can tell you that overall investment volume compared to a year ago, Vancouver was at $4.3 billion. Now it's over $7 billion in the way of investment transactions. So as a Vancouver CMA, there's increased investment activity, and anything that deals with properties with upward potential in value, such as excess land or a redevelopment play into from a retail to a mixed use involving increased cash flow or returns on a property, kind of works, and especially with apartments as well, because you've always in Vancouver have always had the lowest cap rates for multifamily, and it's unthinkable with less than 2.5 or 2% cap rate. But again, the anticipated return for that asset as well as escalations sort of makes that work. So we're definitely seeing an increase in investment activity, not just in Vancouver property, but in your Surreys, your Richmond, and the outlying areas, especially as investors are looking for higher returns, because it's hard to get those type of assets paying 300 or 500 basis points higher unless you go out with a little bit more risk out into the outlying areas. But Victoria is another market that has done really well, and it has attracted not just further office demand, but industrial and retail and overall investment activity, and as well as Kelowna and the outlying area, especially the work from home, as people are looking for sort of more affordable housing and more bang for the buck. And that comparison is sort of similar with other markets across Canada. I apologize, I just don't have the numbers in front of me to go a little bit more specific.
One number that I just wanted to kind of clarify, Raymond. So if I understand, you're saying from 2020 to 2021 in terms of just transaction volume, we're up almost like pretty close to 100%, it sounds like.
Yeah. So the interesting number right now is that part of the 2021 activity was based on the delayed or postponed transactions that were planned in 2020, bled into 2021. Now, it'll be interesting to watch the year-end numbers, because you were absolutely right that it's almost doubled compared to the volume last year. It'd be interesting whether or not actually 2021 actually exceeds the biggest investment number that we've had in Canada back in 2019. And I think everything right now is pointing that we're going to exceed 2019. So we're going to blow 2020 away in the way of investment sales activity. It'll be interesting whether or not it actually beats a record for overall investment activity in the Vancouver marketplace. And this is without office, because 2019 and 2018 were driven by the sale of office portfolio, like the Bentall portfolio purchased by Hudson Pacific.
Right.
And it'd be interesting whether or not the increase in volume that we've seen on ICR land, as well as industrial and apartments, sort of blows those numbers out of the water by year end.
In your mind, Raymond, what is driving? I mean, so you answered exactly what my kind of larger question was: is how does 2020 was obviously COVID depressed marketplace,
Yep.
but it sounds like we're still for 2021 potentially going to be at a record level. What do you think is driving that market? Is it in part because of the kind of depressed conditions of 2020, or what is driving demand and kind of this frenzied pace of 2021 in your mind?
There's a lot of capital out there looking for a place to be placed, and when you look at real estate, so that goes with the overall confidence of investors. And what we said earlier with respect to, it's not just the domestic players, but foreign players looking at BC and Vancouver and Toronto and Ontario, because they recognize those type of assets. So there is a big demand for real estate, and the relative stability, not just for Vancouver, but in Canada. And again, this year we've actually progressed. And the other thing that we're seeing is that the overall lease activity for the office side is more in 2021 versus 2020. So we're seeing that aspect of it as well. But it's the overall is the immigration that is going to hit Canada over the next 2 or 3 years playing catch up, and the overall confidence by investors for the Canadian and the Vancouver market. So I don't think this is going to slow down. It may come down a little bit in 2022, and that will be basically the shortage of product, and as well as whether or not 2021 was sort of a double count year from 2020.
Right.
But I think right now there's the overall confidence from investors, not just on a domestic level, but on a global basis for Canada, and the relatively stability of returns for these type of assets.
It sounds like we know you're in Toronto, Raymond, and making the comparison between Toronto and Vancouver. I'm just wondering, we've seen over the course of the last 18, 20 months, and you've mentioned it, this flow of people to the suburbs or smaller communities looking for space. What is your take on cities, large cities, moving forward in terms of potential? Has COVID changed your perspective on the role of large cities in Canada in terms of potential upswing?
I'm an urban planner by background, so I love cities. I love the discussion of how they evolve and change, and that's exactly what they're still going through. But yeah, it's interesting with the return of the condo market, especially on the new home spaces and the project launches in Vancouver. So you have that confidence base, and I think we're going to see assets evolve. And we've been talking forever about retail and how that's going to evolve, and we're seeing a lot more densification, especially with rentals and residential condos, with redevelopment of some of the malls. So we're seeing that evolution and the whole experience part of retail. We're going to probably see the same thing on the office front. There's going to be other tenants besides the traditional tenants that I have in there. Maybe focus on wellness, maybe focus on amenities and the whole aspect of co-working space, offering companies a lot more flexibility to expand quickly or to shrink quickly and still accommodate their office needs. So I think that we're going to see a continued evolution, because some of the aspects that we had pre-COVID for the downtowns, like close to restaurants, close to shopping, you can walk to work, they're still there, right? And that hasn't changed. And I think that the younger workers, the millennials, they still want that aspect of it. Again, with the demographic shift, we're going to see that anyways, with people moving out to the suburbs or to outlying communities for more space with growing families. So I think we're going to see a continued evolution of the urban area of the downtowns. But I don't think the downtown's going to go away in the way of people vacating the downtown and not living there or not using it. But it's going to evolve as people's needs change and companies. And one of the big factors that everyone's facing, and even us as a company, is the ability to attract skilled workers. So there's a shortage, even though the unemployment level is still a little bit higher than pre-COVID. There's still a challenge in getting people to apply for positions. And I think by having amenities and that office experience and the company culture will bring people back in. So I'm still a strong believer in that. I think we're going to evolve with this COVID, and especially with the space layout and allowing for social distancing. But again, I'm a strong believer of both office and the urban areas and downtown.
Now, when you guys are watching and following the transaction trends, are you maybe seeing, maybe some larger scale buyers that now have shifted some of their acquisition strategy, where you're seeing their name pop up maybe in the Fraser Valley, Vancouver Island, or BC's interior, maybe traditionally that you haven't seen, and they've been maybe primarily more of like an energy hub type company that acquires?
Yeah, absolutely. Because investors are always looking at, and institutions as well. So it's not just by geography, but it's also by product type. So, there's increased interest in public storage facilities, and the whole thing about life sciences. I think investors will look at different sort of products and geographies that allow them to, one, perhaps diversify or allow for potential growth or redevelopment down the road. So I don't think it's any big surprise that we're seeing other sort of perhaps bigger institutional investors are looking at outlying areas as potential sort of short-term investment for long-term gains. So I think we're going to see more of that going forward, especially with the number of assets that are available. And again, based on a pricing standpoint, and depending on their investment return objectives, that they have to look at alternative products and as well as geographical locations to maintain a certain return on their assets or their investments.
We talked a little bit about, the just an excess of capital looking to be placed in the market. Raymond, this is kind of I don't know if you kind of in the data and research world, if you kind of think in these terms, but if you were looking, with all the information you have and a very competitive marketplace, if you were looking to buy one asset class in one location right now as an investment yourself, where would you be looking and what would you be looking at?
Before you answer that, let me grab my pen and paper.
Yeah, asking for a friend. His name's Cory.
Here's the problem with that question, and I have certain biases because I started my career in industrial research for a commercial brokerage company, and I absolutely love industrial. I up and down industrial rents always go up and down, maybe about 10, 20%. And you don't have that same exposure with other asset classes. And with industrial, based on its availability rate, always has those type of returns. And I also look at industrial as future development plays. But right now, they could be providing a 3 to 5% return on cap rate, but down the road, based on redevelopment and based on the evolution of urban areas and for uses, industrial will increase, or that parcel will increase in value one way or another. Saying that, I like anything that has anything with excess land or potential redevelopment. And retail has been on the radar for a lot of investors just because of its location, right? And the upside of redevelopment and having a higher or best use value. But from an asset class, I really like industrial from a stability and potential return aspect of it. And but I also like anything with a little bit of hair on it that can provide increased returns down the road. So I believe, I guess, in the medium to long-term hold, not the overnight flip.
Mm. Maybe just thinking, it sounds like you've kind of touched on this a little bit in terms of what the market looks like kind of 6 months, 12 months, and then 3-5 years from now. But can we have a best case forecast here for maybe British Columbia and Canadian commercial real estate?
Okay, as long as I'm not applying any dates to my forecast, I'm okay with that.
Okay.
Right? So if you break, we just talked about industrial. Industrial is going to do well for the next 5 years and beyond, right? Just because of e-commerce, right? And I think retail will find its footing in the way of repositioning. But I think we're going to see a continued evolution in that area. We don't have the same things with our malls turning into giant fulfillment centers like we're seeing in the U.S. But I think there will be some changes in the area. And I hate to say on the office side, so I think it's going to improve, but it's going to improve very slowly because both Vancouver, you're looking at about 6 million square feet under construction, mostly in the downtown. In Toronto, you're looking at about close to about 9 million square feet under construction. Yeah, that's going to have a little bit more pressure on the older stock buildings, especially that don't have the similar amenities as some of the newer buildings. But so I think that the verdict's still out there, and companies are still trying to figure out how much space they need and how that's going to change. So I want to put a hold on that office side. I don't think it's going to tank, but I think the downtown will come back. But it'd be interesting the speed of people returning. Apartments, I think you can't go wrong with that, and it will continue to do well, and it's going to do even better with immigration coming back, and plus the foreign students are very good return. That's going to have more demand in that area. And again, we still have that problem in Canada with shortage of housing. So I think from a market fundamental standpoint, we're going to do okay. And industrial, we're going to do better compared to perhaps on the office side. But I think we're still going to go through a transition. But I think the way the Canadian assets are, especially Vancouver and the international exposure, that they will always attract attention and there will always be a demand for that type of product. So I don't think that we're going to see any major corrections over the next 2 to 3 years. And I think it's going to be a gradual recovery, but it'd be interesting to see the speed of it in the next 12 to 18 months, because you have inflationary concerns, you have the potential increase in interest rates, and as well as perhaps a global slowdown. And you still have the supply chain logistic issues that you're seeing that are starting to hit us. So there's a bunch of other factors. But I think overall, I think we're good. I don't want to say we're doing fantastic. I think we're doing okay. And we sort of have to wait and see how other things sort of pan out over the next 9 to 12 months.
You know, as a final question, and you kind of touched on it, risk factors, biggest risks facing the commercial real estate market in Canada over the short to medium term. I mean, you just kind of touched on a few, but what in your mind are the biggest risks?
Inflation, whether or not that's going to slow the economy down. And again, the whole thing, the impact of the fourth wave, whether or not that's going to result in type of lockdown, and the U.S. economy, whether or not they're going to continue at its pace. And again, if you look at this year, we have had a number of sort of surprises, especially lumber prices, right? There's no way anybody could predict it, the increase in lumber prices, how fast it shot up and how fast it's come back down, right? So there's a few wild cards out there just because of how we're more of a global economy and we're depending on resources and as well as assembling in other parts of the world that may slow some of the construction here. So there could be a few things with interest rates and inflation, but it could be a combination of different factors that may impact it. As you can tell, I'm just paranoid by nature, but there's a number of different factors out there that may tip the economy for us, right? So I'm sort of optimistic going forward, but at the same time, I have I'm a little bit cautious with some of the what's up, Ray? The knowns and the unknown knowns or something to that effect. But there's still that aspect that's causing me to lose sleep at night.
Raymond, to wrap up here, we have a 6-pack we call the 6-pack powered by Red Point Law. It's 6 lighthearted questions so we get to know you kind of a little bit outside of the office. Do you have a few more minutes to hang out with us?
Wait a minute. You didn't tell me about these.
Yeah, see, the problem is if I did, then you would prep. So
okay, I'm game for this.
Okay, so the 6-pack is powered by our good friends over at Red Point Law. For all your commercial legal needs, visit them at redpointlaw.ca. All right, Raymond, first question up. Favorite movie?
The Hunt for Red October. I've seen that movie 50 times.
That's a good movie.
And I can watch it another 50 times. It's just it's something that I really enjoy. The Sean Connery, I think that's his best performance, and it's my favorite movie.
Good movie.
Right on. One book you would recommend to anyone listening?
It's I go back to the whole thing of good to great books or
Jim
good
Collins.
to greater. It's focusing on your core strengths. Sort of moving away from that. What made you successful is going to keep you successful.
This is the question that we just peel back the layers and find out who you really are. Favorite band or musician? Favorite band or musician?
I'm trying to think of something not to embarrass me, and as well as my kids just make fun of me. But I still like Simon and Garfunkel. I like that mellow music, especially when I'm working, and something that is a little bit on the soothing side.
When I got here to the office, Matt had Britney Spears blaring on his computer, and he realized I was so he turned it down really quickly.
Hello, darkness, my old friend.
Yeah. It really helps on the research side.
Yeah. I always feel bad for Garfunkel.
I know. I think you got the raw deal.
Yeah. Favorite vacation spot, Raymond?
Oh, you know what? It's food basis. I love Venice. I could spend a week there in just the restaurants. And the favorite vacation is probably our last Hawaii vacation on the big island that's really rustic still, and the weather is just perfect, and the golf is just perfect.
Well, you don't like landing in Maui and the first thing you see is Walmart and Costco?
Yeah, it's I just like it was just because we actually went to Honolulu first, and to go from Honolulu into the Big Island, it was just like this is it. This is perfect.
Quote or inspirational quote that you choose to live by?
You know what? Be recognized for something and be the best at that. And as well, we'll do a couple of quotes. Always look at the fun part of whatever you do. If you're not having fun, I don't think you're living. And I think having a sense of humor and having fun helps you grow as a person. And you're just not bitter all the time, right? Sorry, that's not probably an exact quote, but that's how it's.
No. But words to live by. I like it. Last question for you, Raymond, and we really appreciate your time. One piece of advice after a long career studying commercial real estate. One piece of advice for anyone listening in regards to commercial real estate in Canada.
You know what? It's relationships. And I started 33 years ago in this business, and a lot of those people that I started with, I'm still very good friends with. And it's the relationship and the networking ability of the people that surround you, make you a better person and better informed. But I think those are the relationships that you carry for the rest of your life, and not just in a job. So it's really important to be able to make friends and to establish strong relationships in the business. And I think that goes with other sectors, not just real estate. And real estate, as you know, is a very close-knit community. So I really appreciate those friendships that I built over the years.
Great advice, Raymond. And how can our listeners find out more about yourself and everything that the Altus Group is doing?
Well, on LinkedIn, as well as I gave you our website at the beginning of what our company does and the publication and the services. So I think those are the first two things you start. And plus, you know what? Call me up or send me an email, and I'm quite happy to talk to, especially exchange ideas. Like I really enjoyed the discussion that we had today. Anytime you can exchange ideas or exchange, especially opinions, it works. So feel free to reach out to me anytime.
Excellent. Well, thank you so much for your time today, Raymond. We really appreciate it, and all the insight, not only for BC, but also how we're stacking up across Canada.
Great. I had a lot of fun. Thank you very much for inviting me.
Thanks, Raymond. Take care. Have a good day.
You too. Take care.
Bye. And there you have it, folks. Our interview with Raymond Wong. I mean, you know what I'm going to say before I even say it, so I'll let you go ahead and say it.
Hello, darkness, my old friend.
No, I was going to say amazing.
Oh, no, phenomenal is the actual line.
But Adam stole that word, so I'm gifting you the word amazing now.
Oh,
so,
thank you.
Amazing.
Just don't
episode.
gift me awesome.
Amazing episode.
Absolutely. No, it was a fantastic conversation with Raymond. It's funny that he seemed very bullish on commercial real estate generally, and yet said, as you can probably tell, I'm very paranoid. I'm a very paranoid
Well,
person.
I think if you're going to be a research guy or an analytics guy, you mean you've got to always take everything with a grain of salt and look at the underside of it, right? Because they're tracking trends and data, and they've seen good markets and bad markets. So I think sometimes people almost look into commercial real estate or real estate in general in the province of BC. Like if I buy it, it's going to go up, and it's a marketplace, and a market means it goes up, and a market means it goes down. So I think they're foreshadowing potential stuff like the fourth wave that he mentioned that may or may not come into it, but they have to consider that when sort of putting out data information of what may or may not happen.
Right. He's pretty confident on industrial though.
Yeah. How can you not be?
I feel like if we've been doing our podcast on the residential, real estate generally, but the residential side of the market for 5-6 years. I don't think I've ever heard anyone talk about anything with the confidence that industrial is spoken about by guest after guest on this show. Well,
I'll tell you right now, you could go buy a tent, put it on a piece of land, and put industrial property for lease, and you'll get multiple offers on it. That's just what's happening. And I think industrial has been a great moving asset for probably the better part of maybe 6 years, 5 or 6 years. The pandemic has just put that much more onus on that asset class. And as there's a housing crunch, it's very easy to take old industrial land that might be 30 to 50,000 square feet and has a 3,000 square foot building on it and plunk 300 condos.
Right.
So you've got shrinking supply, increased demand. Pandemics put even that much more demand on it. It's just it's a perfect storm for any landlord or seller in that asset class for now and probably for the foreseeable future.
Right. I think he was saying at least the next 5 years, he thought. So,
Yeah.
no, great conversation with Raymond, and Altus Group is a fantastic resource. That's obviously the case. What else do we have before we go, Cory? Well, we have VancouverRealEstatePodcast.com. This is our website where all things residential and commercial real estate live. We have the transcripts of these conversations over at VancouverRealEstatePodcast.com. We also have the Live Wire, which is our weekly newsletter where you're going to see VIP access to projects such as industrial space in Victoria. There are still units available. So head over to VancouverRealEstatePodcast.com and sign up for the Live Wire where you'll see that deal and many other deals along with stats, episodes, and so much more. And we also have WilliamWright.ca, of course.
Yep. People can visit us at WilliamWright.ca for all the latest William Wright commercial news. They can drop me an email at Cory@WilliamWright.ca, or they can call our Vancouver office at 604-428-5255. Whether you're looking to buy, sell, lease commercial space, we'll put you in touch with the best advisor and the best marketplace that you're in. But before we go, we got to leave on a cliffhanger here.
Oh, okay.
We got to leave on a cliffhanger. I caught your guys' episode this morning as I was driving here.
Right.
You know, you guys are on this great health kick. A lot of our listeners don't see it, but I come in here and like Adam's literally eating kale like a bunny in the corner there. He's got
It is true. His lunches have changed dramatically.
Yeah, it's I don't know if there's even lunch in there anymore. The guy's lost so much weight. Not that he had to, but
yeah.
And
he's looking good.
And Peloton is a big thing.
Yeah.
Everyone's talking about Pelotons. And you guys had mentioned, or earlier Adam had mentioned, you know, sort of who his favorite Peloton instructor is.
Right.
And I feel like you're setting me up for failure by asking me mine. So I will tell you.
You have told me.
I will tell you next week.
Okay. And I have seen the video.
Of me Pelotoning, that's not good. That is not good.
Tune in next week to find out who Cory's favorite instructor is on Peloton.
Is that what we're coming to now?
God. Oh my God.
Is that what we're coming to? We're having to like lure people back next week by who does Cory bike and watch at the same time.
So hope everyone had a great Thanksgiving and back to the grind, but we'll be back next week, of course.
Back on that Peloton, right?
Take care.
Thanks guys for listening.
Subscribe today.